Guys, these are the reasons why you should switch to swing trading. I know most of the people like to day trade, they like to scalp, but I'm telling you guys, of all of the methods that I have seen in trading, the best one I see is swing trading. Because swing trading allows you to relax, it allows you to set your stops at a daily level, 4-hour level, or even the weekly level if you want to hold the positions for maybe a month or so. Swing trading is the art of holding trades for 2 to 3 days or even a week. Sometimes you can even hold the trades for like 2 weeks. I know some of you guys will be upset because you really like to go in and out of trades, but believe me, swing trading is the most relaxed way that allows you to lose less in the market and win more trades, because you will be able to catch up to 400 pips, 300 pips, those high time frame movements from the weekly time frame to the daily time frame. So if you're looking to learn how to swing trade, this is a video for you, because later on in the video I'm going to show you guys the swing trading technique that you can use to be able to get entries on a higher time frame and hold your trades for at least a week or two. This will allow you to be able to get 300 pips, 400 pips, even 500 pips in my Telegram channel that I have in the description down below that you can join for free. I normally post swing trades on there, which we hold for a week, sometimes even 1.5 to 2 weeks, and we have a 60% to 70% win rate on there. So most of the people who joined the Telegram channel ended up leaving it because they wanted to get scalping trades and day trades. I don't normally send out scalps or day trades. I do swing trades because I feel that is safer and it's better for the people who are on there, and also for myself because I have tested scalping, day trading, intraday trading, but the best one is swing trading. Sometimes I've even held trades in a positional way. For example, I've held trades sometimes for like 4 months, 5 months. There's even a time I held a trade for 6 months. So it allows you to really have a relaxed mind while you are trading. It allows you to have your time freedom to do some other things while you are actually trading. So guys, I don't want to waste so much time talking. Let me take you onto the charts so that I can show you guys how to swing trade from a higher time frame. Now, before I go into the charts, do subscribe to the channel, give this video a like, a thumbs up, and let's go. Okay guys, so we are on the GBP USD chart. As you guys know, GBP USD is my favorite pair that I trade. I do trade other pairs, but GBP USD is my favorite pair. So on GBP USD here, I'm going to use the Pepperstone broker. I use the Pepperstone broker because I want to show you guys a breakdown of this swing trade, which I called in the Telegram channel. So let's go on to the weekly time frame. Okay, we've got the weekly time frame. Of course, the trade will not appear on the weekly chart, but I'm going to let's use another broker. Let's use forex.com. Okay. Let's use Owanda. Okay, let's use Owanda. Let me remove the drawings. Remove drawings. Okay, so whenever you're swing trading, avoid any time frame below the 4-hour chart. Okay, avoid any time frame below the 4-hour chart. Believe me guys, if you follow these steps, you'll really see how swing trading is interesting, and you'll start to ask yourself why you have been scalping and day trading all along. Now, I'm not saying that day trading or scalping is bad, but I'm telling you, if you go into swing trading, you'll see how relaxed and how much peaceful it is, okay, to swing trade. So here on the charts, you want to start from the weekly chart. Okay. You can also start from the monthly chart, but monthly chart is when you want to hold trades longer than 2 weeks. If you want to hold trades for a month, 2 months, 3 months, you can use the monthly chart. but the weekly chart is ideal if you want to hold your trades for just a couple of days, okay? So on the weekly chart here, you want to first determine your key levels, okay? Determine your key levels. Now, GBP USD, as we see it here, on the weekly chart, we see that GBP USD created a high, higher low, higher high, equal low, higher high, higher low, higher high, okay? Now it is pulling down, right? This is how the chart for GBP USD is looking. Okay, so after you've seen this, what you want to do, as I told you, I remember I showed you guys this in a previous video, which I'll leave at the end of this video. You can go and watch it, and it will really be helpful for you to understand this better. So let me show you guys just a recap of what I taught in that video. I'll show it to you guys now. You want to, after you've discovered or looked at your structures on the weekly chart, you want to put your drawings, your rectangle tools on the highs, okay? Let me just change this to level of structure template, okay? So you want to put your levels on, okay? Draw these on the highs, okay? And the lows on the weekly chart. Believe me, guys, this is the simplest way of drawing market structure, okay? Just extend them so that they all are fitting properly like this. You can extend this one since they are all within the same area, okay? Then you want to draw also here, but this is too far. We can leave that alone. It's too far. Let's first remove this that we can see clearly. Okay, so this can just modify it a bit to cover also the wicks. Okay, now this one can put another here. Let's see, put another one here like this. Okay, make sure they are together. Okay, so this one may not be very relevant, but we'll leave it on there just in case. So after you've drawn those levels on, what you want to do is you go down onto the daily time frame to look at lower time frame entries or lower time levels of structure. So you go down to the daily time frame here. Okay, so on the daily time frame, you can see that these levels are respected. Those are levels of structure, okay? So we can see that this one is not very relevant. We can remove this one. We can remove this one, okay? And then what you want to do now on the daily chart is you want to look for refinement. Like here, you can remove this one, just refine, remove the levels which are not very significant. Now, after you've done this on the daily chart, now you have only 3 levels, which are good levels for you to trade on. You want to now look at levels of structure on the daily chart, whereby this is a high. Let me show you guys. This was a high, a low, a higher high, a higher low, a high, okay? This is a low. This is a low, okay? That's a slight lower high. This is a low, slight lower high. This is a low, equal low, slightly lower high, then lower low, okay? Then lower high. Then this is a low, okay? Now, what do you see here, guys? Whenever you see a change of structure or a change of market structure, you know that the trend on that time frame is shifting from a bullish trend to a bearish trend, or from a bearish trend to a bullish trend. So a change of structure happened when this low was broken. This low here. When this low was broken, we got a change of structure. I'll remove this. I'll remove that. Okay, so here I don't know, let me just fill this a bit, make it a bit brighter. So here we got a break of structure on the daily chart. Okay, we are now analyzing. We got here a break on the daily chart to the downside. Okay, a break of structure. Now, before the market reached here, we had this break of structure here. So after the break of structure on the daily chart like here, okay, of course you have this also here. You also have this level here. Okay, what you do is you go on the 4-hour chart. Okay, come down to the 4-hour chart like this. This is where you're going to start doing making your entries. Okay, now your entries would be after the break of structure here. Okay, break of structure here, you're looking for an engulfing candle. Here the market would pull back up. It comes back and creates this candle here, and then creates a bearish engulfing, this one here, after a retest. Okay, creates this bearish engulfing. This is where you're going to take your trade. Okay, your stop loss is going to be slightly above this level of structure, and you're going to target these levels here. Can target this one, okay, or take profit 1, take profit 2 here, take profit 3 down here. Okay, if you want to hold it that long. Okay, you can see right now you would have your take profit 1 and 2 smashed, and now you would trail your stop loss to this level up above here, above this level, and hold this trade to take profit 3. Okay, that is how you get your entry. That is how you get your entry. I hope you guys see this clearly, how swing trading can be easy and enjoyable, because you hold this for several days. Okay, so trading like this on a higher time frame allows you to relax, because you can check on your charts maybe once or twice a day. Check on your trades once or twice a day and see whether you're pushing into profit, or you need to see what to do to manage your trades. This method of swing trading is from a weekly chart to a daily chart, where you draw levels of structure. Then when the levels of structure are broken from the daily time frame, you go down to the 4-hour chart and look for candlestick formation, bearish engulfing, bullish engulfing, double top, double bottom, whatever, marubuzu candle, inside back candle, whatever candlestick formation appears on the 4-hour chart after a break of structure on the daily chart. That is when you enter your trade, put your stop loss above the level of structure before, which is the level of structure on the daily chart. So your target would be the levels of structure on the daily and the weekly. Those are your profit targets. When you trade like this, you enter your trade, let it be, set it and forget it. Let it roll. Okay, you will see that if you trade like this, you will get less signals, less entries, but more wins. Hope you guys found value in this. If you found value, please do leave a like, comment, and subscribe to this channel. Till next time, guys, peace out.